Hi guys, so I'm getting started here a few minutes behind schedule. Let's see. Wait for a few folks to hop on. And if you're watching, please click the share button so that we can get more viewers on here, get the most information out to the public. So I'm actually going to do that right now. Okay. Please share, everyone. This live thing is new to me. All right, so anyone that's good at doing these live videos, please share, because I'm not quite sure how. All right, so good afternoon. Happy Wednesday, happy hump day, happy April Fool's Day. Today's also day 10, I think, officially of the quarantine, or day 17 for some of us. And I'm attorney Jennifer Mira. I probably should have started with that, from KEILY MIRA LAW. And the purpose of today's video is really just to talk about some new things going on since the COVID-19 pandemic, specifically to provide some clarity for those who are financially struggling as a result of the pandemic, who need to either apply for unemployment or apply for some sort of financial assistance through the SBA. And there's so much circulating right now, from the federal government, from the governor's office, the Connecticut governor's office, and from a number of different people who are trying to get this information out. So there's just a lot of information out there, and it can be very confusing, especially because what we're talking about here are laws that are thousands of pages long, hundreds in some, but really we're talking about thousands of pages of laws that we're trying to summarize very briefly for everybody to understand. So bear with me, because I've made several notes. I want to get as much information out to you guys as possible. Feel free to post questions. I can see some of them come up on the screen, so if I can follow along and answer your questions, I'm happy to do so. And if you have a preference about whether you want to hear about unemployment first or SBA loans first, please post. Let me know what you guys have questions about with respect to those things. Otherwise, I'm just going to keep plugging along. So, we're not only talking about laws that are thousands of pages long and that contain a lot of detail that's difficult to summarize, but we're talking about an unprecedented situation, right? So there's a lot of these systems, whether it be the banking system, the SBA system, or Connecticut Department of Labor. A lot of these systems aren't designed for what we have going on right now. So it's going to take time, and the problem with that is that while it's taking time, businesses and people are suffering. So the purpose of this is really just to help any way that we can, answer any questions, assist in any way that we can. If we have people that would like help applying for unemployment, please reach out to me. And after today's video, I will be available. You're able to email me about links that you need if you want to apply for some of these loans or apply for unemployment. So please do email me, jmira, that's M-I-R-A, at kmlegalct.com, and I will happily send over any links that I have. Okay, so with that, unless I have any request for unemployment or SBA loans first, I will start with unemployment. So Connecticut unemployment, you can apply through the Department of Labor, and traditionally the system is set up for those who have lost their jobs by no fault of their own to get compensation, a percentage of what they normally would have made at their prior job. That's what the system is designed for. So it's not designed for, obviously, people who lost their jobs as a result of misconduct or voluntarily quitting their jobs. But what's different about the system now in the wake of COVID-19 is that it allows for self-employed and furloughed employees to apply for unemployment, which is unprecedented. And the system in itself with the Department of Labor is fairly easy to fill out the information. There are some things that you need to know before filling it out, so I'll go over that as well. But on a basic level, it's fairly simple. Now with the self-employed and the self-employed and furloughed employees, the system isn't prepared for that. So you have a lot of people who are applying who may either see a denial come through first and have to appeal that denial because the new system is still working the kinks out, or what you're going to see, and is more likely, a significant delay in self-employed and furloughed employees from collecting unemployment just because they're not prepared really to approve or deny since the laws are still kind of taking effect. So when you log into the Department of Labor system, and again, if you guys want the links to it, I'm happy to provide them. Just shoot me an email. You're going to log in and you're going to obviously give your information, your basic personal information, and then it's going to ask you, are you self-employed? You're going to select yes. It's going to ask you whether you are looking for work and willing to and able to work. You're going to say yes. Now, there's typically a requirement that those who are applying for unemployment are also actively looking for work. That has temporarily been suspended, that requirement, but it's still a question on the form, so you have to select yes when you go through that. If you're self-employed, you're going to want to list yourself as the employer, and the system is going to ask you, obviously if you own a business and you're an employee of that business, even if it's your own, then you list the business itself. But for example, with real estate agents, you're going to want to list yourself. You're an independent contractor. So when it says, who your employer is, that's what you would want to put. You're also going to want to have details about the amount of money that you've made in the 6 months before this pandemic started, and the Department of Labor is gauging that as the end of January. So from January of 2020, 6 months back, how much money did you make as either self-employed, or if you're a furloughed employee, how much money you made during that period of time 6 months prior, and you're going to need that to put into the system. Typically, the Department of Labor, when you're applying for unemployment comp, you're looking to get about 40 to 45% of what you had made previously. Right now, with self-employed individuals, we don't really know what the government's going to do as far as the quantity that they're going to assign to people or approve them for, because this is, like I said, unprecedented. So we're not really sure what they're going to do about that. But we do know that on a weekly basis, you are going to each get $600 in addition to whatever you're owed from the application of unemployment if you do get approved for benefits. So that is definitely going to help alleviate some of the financial struggles for people going through this right now. Although, again, it's delayed. The system is delayed in actually getting these benefits out to people. So let's see. Okay, so sorry guys, there's a lot of information here. And I guess I probably should have started by saying that even though I'm an attorney and I'm here to provide you information, this isn't considered legal advice. Obviously, call me specifically if you have questions. I'm happy to give you specific answers to your situation. And as we head into the SBA loan portion of this, you want to speak to a CPA if you're a small business owner or a financial advisor to make sure that taking out a loan with the SBA is the proper thing to do. So definitely speak to other professionals, not just me or not just a lawyer, about this. Okay, so if we don't have any questions about the unemployment compensation applications, which again is still in flux, I'm sure a lot of you have already applied, and you're going to have to wait, unfortunately, a few weeks to hear back about it. So if we don't have any questions about that, I will move on to the SBA loans, which I think is the more convoluted part of everything. You guys are very sweet. Okay, so the CARES Act, the federal act that was passed by President Trump, created some systems for small business owners to be able to obtain financing, some forgivable, which is the crucial part of all of this, as part of the coronavirus pandemic. So the CARES Act created a couple of new things, but there are already disaster relief loans that the SBA has had going on for some time. So I want to talk about those, talk about the differences between those programs, and answer any questions that you guys have. So the SBA loans, there are 4 types of programs, I should say, that have existed. There is the new program that came out of the CARES Act, which is the Paycheck Protection Program. It's shortened as PPP. Then there's a Economic Injury Disaster Loan, which the acronym EIDL is used, fairly common for that. And then there is a Emergency Economic Injury Grant, which is also a forgivable as a grant. And then some SBA bridge loans, which really only apply if you currently have an SBA loan. And unless I hear from any of you that you have them and you have questions about them, I'm going to skip the bridge loan part because that's really only applicable to those who have SBA loans currently. So with the Paycheck Protection Program, that's the PPP loan, and it's really the main thing that came out of the CARES Act that's going to apply to a lot of you and what we'll spend most of the time discussing. So the purpose of this program is to keep payroll funded. So that's the specific thing. Now, payroll is defined as operating expenses in addition to just wages. So it's going to include wages, salaries, commissions, cash tip splits. It also includes benefits. So if you're a small business, you have less than 500 employees, and you've been in business since February 15th of 2020, you are either a sole proprietor, self-employed, independent contractor, freelancer, all of that, you can apply for the Paycheck Protection Program. It is the only forgivable option, with the exception of the grant, which I'll talk about in a moment. It's the only forgivable loan that the SBA is offering. So what you can use the pay for, the loan for, again, compensation, benefits. So if you pay vacation, medical, sick leave, family leave to your employees, it's included in this. If you pay health insurance for employees, it's included in the payroll cost. If you've given any sort of severance benefits, retirement benefits, payroll taxes, your rent, mortgage interest, utilities, these are all really crucial things here that are all roped into the payroll cost that this PPP program is able to apply towards. Now, when you first apply for this, it's going to come across as a loan. It's going to have a maximum interest rate of 4%, and the amount of the loan is going to be based on the amount of your payroll expenses. So you're going to submit an application, and you're going to list in the last year what have your expenses been for payroll, for rent, for these benefits that I just listed, vacation time, health care, all utilities. You're going to total that up, and then 2.5 times that amount that you pay monthly is going to be issued as the loan amount. That's how they determine what the loan amount is. And what is going to be forgivable, you have to apply for the forgiveness. Not everybody will qualify because there are some requirements for it to be forgivable, which one of the main requirements is that you don't lay anybody off in the meantime. So that's a very crucial part of it. Is the purpose of this program is to keep people employed, to to allow you to not, as a small business owner, not lay people off. So the way that you lose that forgivable piece to it is if you do lay people off. And obviously also if you don't use the funds for what they're intended to be used for. So generally the amount that is forgivable is 8 weeks, so 2 months of those payroll costs. You may end up getting more of that loan than 8 weeks worth, but the portion that is forgivable will be 2 months worth. So keep that in mind. There is a loan term, if not forgiven, or if a portion of it is not forgiven, the loan is not forgiven, of 10 years. So you'll have a 10-year repayment plan as far as that goes, with, again, a maximum of 4% interest for the portion that's not forgiven. The really crucial part to all of this is that there is no personal guarantee. There is no collateral with this type of loan, which is amazing. It's really, and it's streamlined. Like, the application process is streamlined so that the money can get into people's hands as quickly as possible. Now, you're going to apply for this through a local lender. There are lenders that are approved through the SBA. Again, if you guys want links to any of that, I can send it out to you. You have to find a lender that does have an affiliation with the SBA in order to do these types of loans, and there's 100 of them at least in Connecticut, and I know that the governor is working to add more people to that list. So as early as April 3rd is what we're being told, that you can walk into a lender that's approved with the SBA and apply for this type of program. And then what happens is the bank that you've applied with will apply in turn to the SBA for coverage to ensure that PPP program loan. So these are all very important things. It's the way to expedite cash to the business, and not having to worry about personal guarantees, not having to worry about collateral. So this is super important for small businesses. And the fact that it's not just payroll, it's rent too, a lot of expenses. Let me just make sure I didn't miss anything here. If you have any questions in the meantime, please let me know. We talked about forgiveness. You have to keep documentation in the meantime to prove that you are in fact using the funds for the payroll compensation. So you have to have payroll filings, unemployment filings, any verifications of rent or mortgage payments. You're going to need to supply that because you're going to apply for the forgiveness after you get this loan. Let's see. The limitations on getting forgiveness. So you're not going to obtain forgiveness of this loan if any single employee's annual compensation is over $100,000. So that it maxes out at $100,000 per person on the compensation. You cannot use the funds to pay certain types of taxes, so keep that in mind. You can't employ people who are residing outside of the U.S. You can't make mortgage principal payments. So you can make rent payments with these funds, but you can't make mortgage principal payments for obvious reasons. And that's pretty much all the reasons you would not be eligible for forgiveness. The other thing too is, before we head on to the next type of loan program, the government is not going to allow you to double dip, okay? So you have this payroll protection program, and then there are some other loans you can qualify or you can apply for, and whatever you get that is not forgivable is reduced by the amount that you've received that is forgivable. So the next program we're going to talk about is the Economic Injury Disaster Loan, the EIDL. That has been in existence. It wasn't a result of the CARES Act. So any business who's suffered through an economic injury or disaster can apply to the SBA for this type of loan. Now, this is much more like a traditional loan, and I'll get into the details of that. But if you become eligible for this type of loan, if you get approved for this type of loan, and you've also received a forgivable loan through the PPP plan, the amount that you can borrow from the EIDL, the Economic Injury Disaster Loan, is going to be reduced by the amount that you've received through the PPP plan, because the government doesn't want you to double dip or get into trouble about owing too much once this pandemic situation it moves on, which it will. We will move on from here. So the next loan that we were just talking about is the EIDL, so the Economic Injury Disaster Loan, and this is predominantly for working capital. You can pay payroll expenses through it as well. Again, you need to have less than 500 employees. Sole proprietors, independent contractors are okay to apply for this, and you have to be located in a disaster area. Unfortunately, for the entire country, we're all located in a disaster area right now. You have a maximum of $2 million you can borrow, and the interest rate on this is 3.75, so that's the maximum interest rate. So personal guarantees, there's some question here based on the streamlined version of this with the intent to try to get money into hands of struggling businesses as soon as possible. There's a question as to whether they're going to require any personal guarantees or any collateral for this. There is some indication that as long as the loan is under $200,000, there will be no personal guarantee required, and there's some indication that as long as the loan is under $25,000, there'll be no collateral required. Now, I don't take my word for that. That's what we're hearing, but that has not come through specifically yet. Now, because this is more of a traditional loan that you'd be applying for, this is the EIDL, you'd apply directly through this SBA, so you're not going to your local lender or your local bank for this. You're going to the SBA, and this is going to require tax return verifications. This is going to require a profit and loss statement, and a lot more detail as to the financial stability of your business before all of this. You can use the money for payroll, for sick leave, for increased production costs, for fixed business debts, so you can actually pay loans with this loan. Mortgage payments, no specific qualification that you can't use it for the principal part of the mortgage, because again, this is a more traditional loan. You can pay rent with it, you can pay accounts payable with it. So the reason that you can use these funds for more is because it's not forgivable. Okay, now there's one piece to this which is called the Emergency Economic Injury Grant. Now that is, while you apply for an EIDL, you can also apply for an immediate $10,000 grant to come to you, and it's supposed to come within, I believe, 3 to 5 days of your application. When you apply for it, as I've helped clients do this already, when you apply for it, you in fact put in your routing number and your account number, so that once it goes through, it immediately gets deposited into your account. So this is meant for a immediate injection to these small businesses to get them going. And this $10,000 is forgivable no matter whether you qualify or you get denied for the EIDL. So it is a grant. You do not have to pay it back. Even if you get denied for the Economic Injury Disaster Loan, you do not have to pay it back. Again, with respect to the PPP we were talking about, that plus the $10,000 if you receive it, those two are used to determine, if you do get approved for the EIDL, how much your loan is going to be, because they will reduce it by whatever you've received through the forgivable program or the grant. So keep that in mind. Again, there's no double dipping on any of that. Let's see. So we've talked about the grant, we've talked about the EIDL, and then there are bridge loans, as I said before. If you have an SBA loan right now and you can't make payments on that, and you need, because your business is shut down or you don't have any income, and you need more funds in the meantime, there are bridge loans to kind of get you, I think it maxes out at $25,000, to get you an injection of some capital so that you can keep going. Now with the EIDL and the PPP, any portion of it that's not forgivable, and any bridge loans, there are going to be deferred periods of payment, or forbearance basically. It's a minimum of 6 months that no payments will be due, and then it will extend out to a year if possible or if needed. So these loans are available, you need to apply for them, And obviously, there are qualifications. Feel free to reach out to me to talk more about those. It's in all of our best interest that our local businesses stay up and running. And that includes my firm too, and obviously we're doing everything we can to do that. But we're here for you. We're here to help any way that we can. There's going to be no legal fee from me if you're contacting me and asking about information for any of this. That's our commitment to the community here in Connecticut to try to keep some of these businesses afloat, and some of you independent contractors financially stable as much as you can be in the meantime. So please reach out if you have any questions about any of this. It is changing. The landscape of all of this is changing on a day-to-day basis, so don't be surprised if new information comes out, and obviously if new information does come out, we will do another video and update everyone about that. This video is also going to be linked. I'm going to email it out to anyone who would like. I'll post it on LinkedIn and YouTube in case those of you who don't have Facebook accounts were not able to watch it here. And again, anything I can do, anything KEILY Mira Law can do to help small businesses and self-employed individuals to make it through this, we're here for you. So, hey Deb, how are you? Oh, I've got a question here. If you've done layoffs but have rehired since, do you qualify? That's a great question, Melissa, and yes, you do. There is a requirement that if you have laid off employees and you rehire them by June 30th of 2020, you will qualify. There's also, look back periods as far as how much you qualify for, whether you look back to a certain period of time in 2019 or a certain period of time in 2020, and I can give you more information about that if you have questions and you want to email me. But yes, if you lay off and rehire, you will be eligible still for the forgivable portion of the PPP program. Any other questions? Thanks, Lou. You guys that are watching, where are you watching from? I ask this because I see Sue on here. Are there any other questions that I can answer for any of you? Okay, Melissa, that sounds great. And I don't want anyone to miss this. I am here. I will not be charging a fee for anyone who wants to email me or call me about application to these programs or unemployment questions. So again, wanted to reiterate that because that's something that I think is really important to do for our community right now. And if I don't have any more questions, I will sign off here. And like I said, there'll be a link on our, will this be recorded? Sure, Deb. Yeah, no, I'm going to say there will be a link to this. I'll post it on YouTube. I'll post it on LinkedIn. And I will also have this saved on our Facebook page so you can watch it. It won't be live, but it will be up there again for you to view. Any info as to the reduction in single $1,200 payment? Okay, so, all right, if you are, well, let me answer Melissa's question first. The best contact info for me is Mira, M as in Mary, I-R-A, at KM as in Mary, legalct.com. You can also call my office at 860-251-9552. My entire office is remote right now, just to try to keep everybody safe. And so the phones are being forwarded, so give some flexibility on getting a hold of me through the phone if that's where you choose to reach out. But email works great. Now, as far as the $1,200 payment that Lou referred to, so now everyone, you don't have to do anything. everyone who has filed a return for 28 or 2019 will be eligible for up to certain income limits for a immediate $1,200 check per filer. So if you file jointly, each of you gets $1,200, plus $500 per child, so per dependent that you have, I should say. You get it automatically. The IRS will issue they're saying that they will start to issue them as soon as the end of this week. We'll see about that. Let's see, as far as the income limits, the higher your income is, obviously you'll be entitled to, it scales down. So there's a scale as far as how much of the $1,200 you receive depending on how much income you make. I think it's $75,000 per individual, where it caps out, where you'll receive the full $1,200, and then as married filing jointly, I believe that the income cap is $198,000, and you won't receive the full $1,200. It'll be scaled down as a result. My understanding is that you still get $500 per child, though. Even that doesn't get scaled. That portion of it doesn't get scaled. So, that's my understanding. Any other questions? I'm going to do my little promoting sip of the coffee from the KM cup. Oh, and I wanted to say another thing, because I just got an email about this today. If you have student loans, if they are federal student loans, they will automatically become deferred for 90 days. So even if you do not have federal loans, you can call your whoever manages your student loans, and request a 90-day deferment. Hey Lisa, how are you? But with federal student loans, you'll get a notice that says you don't owe any payments for 90 days. And it doesn't accrue interest, it doesn't accrue penalties, it's just an automatic deferral. And if you're on auto pay, which I am, and I just got this notice today, it will stop the auto. You don't have to do anything. It will stop doing the auto pay, and then 90 days from now, it'll kick back on as part of your auto pay. So you don't have to do anything. It just automatically happens. The only way you would need to call in is if you don't have federally backed loans. Maybe you've refinanced them through a local lender or something like that. Then you would have to call and request that deferment or that forbearance period. Okay? There's so much information coming out. Every day it changes. So like I said, if you have any follow-up questions, please email me, please call me, and I'll be happy to help any way that I can. We talked a lot about the SBA loan programs if you weren't here before, and we also talked about filing for unemployment in Connecticut. So if you hopped on now and you missed that, I will have a link in our Facebook page, in our YouTube channel, and on our LinkedIn. So thank you guys so much. Stay safe, stay healthy, stay home. Thank you all. Thanks for watching. Have a good one.